Is. Let's bring in then Bilal Hafeez, Macro Hive CEO and Head of Research. Also here, Managing Editor for Bloomberg City Latest, Christine Aquino. Good morning, both. Christine, let's start with you and the macro. And I want to bring in from Valerie's conversation around the divergence in terms of US stocks versus EM, rest of the world, and the role that central banks are playing in that. We had the Bank of Canada, one of the major central banks, to be the first out of the gates in pausing, signalling and flagging a pause in rates. To what extent is the Bank of Canada a template for other central banks?
Yeah, it's very interesting, Tom. I mean, I think it definitely is something that other central bankers are watching very closely, including the Federal Reserve. But we have known from just officials commenting over the last couple of weeks that they are very, very steadfast in at least maintaining that they need to keep rates higher for longer, even if they do pause, right? And so I think that's a very important caveat for investors to remember. A pause does not mean a pivot to rate cuts immediately, although we have seen some signs of market pricing for that sort of scenario. But I think generally policymakers will be very, very keen to emphasize that just because they're pausing doesn't mean they're going to be turning to rate cuts anytime soon.
And the GDP data out later today then, as we flagged, what are we getting in terms of the clarity on the health of the US economy and whether the Fed is prepared to look through a slowdown or whether indeed officials will blink?
Well, I think economists are really going to be looking for, again, more signs of that concerted signal pointing toward a slowdown if we are going to get one. I think the issue at the moment is that we are seeing a lot of mixed signals from the U.S. economy, right? I mean, we are seeing that slowdown in housing, in manufacturing, but then the jobs market is still very, very robust, particularly in terms of factory employment and like. And so it really does not feel like an economy that's hurtling toward a slowdown that is deep and long, but perhaps it could be something short and shallow, as some optimists are hoping for at this point.
Okay, Bilal, let's bring you in at this point. JP Morgan's Kalanovic saying, of course, he was a bull throughout last year and he's changed his position, but he's come out and said, look, the fundamentals are clashing with the rally that we're seeing, that the economic data, we are going to be in a recession in the US and Europe. That's his call, and it contrasts with what they're seeing in these equity markets. Is the optimism in equities overdone?
Well, I think it's an issue of timing. I think for now, I think the optimism is well placed, largely, I think, because of the China rebound. But
you would chase this rally?
I would chase it for Asia stocks or EM stocks, and I think that would drag the Western stocks up as well. The other factor that's helped stocks, obviously, is the decline in bond yields as well. And so at some point when that turns up, which I think it will, then that will cause the rally to unravel.
Okay, the other big story, of course, earnings, and we're just seeing that reflected in ST Micro. They came out with a very big beat and the stock rising around 7% on the back of that. Just one example, SAP also better, Diageo better, Volvo Trucks, okay, it was a miss. And then, of course, Tesla. There's a lot more to go on the earnings front. We're just on the fringes of this season so far. But what is your take in terms of the resilience or lack thereof when it comes to the earnings picture? Are you starting to position for a downgrade in earnings, for an earnings recession, or is there going to be more resilience?
Well, I mean, first on the earnings themselves, I mean, to some extent, it captures the mood of the market right now, which is that current data is solid, you could say, or mixed, but the outlooks are generally quite negative. So if you look at the outlooks of many of these companies, all of them are saying there's trouble ahead. So everyone's waiting for this big recession to happen. It hasn't happened yet. My own view is I do think it will happen. It will be deeper and harder than most people think, and it will be later in the year, though, rather than right now.
So a deeper and harder recession than some may think. When it comes to, and you kind of gave a nod to this on the yield question, and Christine, I want to bring you back in terms of the dollar, because dollar plays in, of course, into higher yields, if indeed we get that, and we've had that move into bonds, whether that's sustained. The impact, the importance of softer dollar as you look at a 9-month low for the greenback, is there a sense that this is the trajectory now for the greenback? Or is there a turn coming?
Well, I think there was definitely the conclusion at the end of last year that perhaps the dollar's best gains are behind it. And I think if you are a buyer of that theory that, okay, the Federal Reserve is nearing the end of its rate hiking cycle, they're probably going to pause. That is one reason to pull back a bit on the dollar, especially when you take a look at the equation then for other central banks, right? This is the time, if the Fed is pausing, then this is the time for them to kind of catch up and pick up on those rate hikes. I think the issue, though, is the room with which other central banks have to work with. I'm talking specifically about the UK and the ECB as well. I mean, they are still battling very, very high inflation, but at the same time, they're also very, very conscious of the impact of further rate hikes on the economy. The UK in particular, I think the Bank of England has really guided us toward expecting less rather than more in the way of rate hikes. And so for the pound, that really doesn't give it much of a fillip, even if we have the weak dollar as part of a supporting factor for it.
Okay, Bilal, you've got a favourite trade on the pound. You want to short the pound, you want to buy the Aussie dollar. Explain that one.
Yeah, the rationale for that is the UK data is terrible, we all know. And on top of that, the Bank of England is desperate to be dovish, but inflation is sticky, is high and sticky. And so they're in this really tough situation where they want to cut. The data is terrible, the growth data, but and so they can't. They're almost in a stagflationary environment, which is bad, I think, overall for the pound. Australia, meanwhile, the market is not really pricing much hikes for it going forward. At the same time, the economy is relatively robust. Recent inflation numbers have been strong, and you get the China kicker as well. So you have these two economies that are at different stages. One where the central bank desperately wants to cut, and the market's trying to sort of price that. The other one's the other way around, where the market is underestimating the potential hikes. And so I think that's probably one of the best relative value trades out there.
It's the double punch for the Aussie dollar, isn't it? When it comes to euro dollar, and that's seen gains of, 14% since about September, again, that comes back to this divergence. And whether or not we're getting more clarity, Christine, we've had this debate clearly playing out in the public from ECB governing members, the hawks versus the doves. Who's got the upper hand?
Well, it's going to be very interesting to watch for sure, Tom. I mean, I think there is very much this sense of tension, particularly between Madame Lagarde and the rest of the ECB Governing Council. And, I think she's very much kind of in this position where she has to talk up what the ECB has to do, the fact that they still have a lot of work left to do in terms of tackling inflation, of course. But then it really will boil down to whether she can bring some of the skeptics in the Governing Council to her side. And so I think it's going to be very interesting to watch. We're going to hear from them next week. I'll be watching as well for that dynamic between the Governing Council members, just a little bit of that body language, and what we hear from Madame Lagarde in terms of just the unity within the Governing Council when it comes to tackling a still high inflation problem.
Bilal, just very briefly, European stocks versus US, where do you stand?
I'll be bullish on Europe over the US and more bullish on EM.
When do you fade that? What do you need to fade that and reposition towards the US?
I think the timing of the fading of Europe would be when the European growth data starts to turn down. We had a terrible run towards the end of last year. It started to stabilize now. It's picking up. As long as that's the case, then Europe should do well.
Okay, Bilal, Hafeez, thank you very much indeed. The Macro Hive CEO and Head of Research, and of course Bloomberg's Christine Aquino on a number of key market themes that were